get started. Awesome. Okay, welcome to the webinar today. Those of you that don't know me, my name is Sean van den Berg. I head up client education at PSG Wealth. Today we're talking about the topic today is the grass may be greener offshore, and I think it's quite pertinent now with what's been happening the last week in what's been named as what they call Brexit. You see my subtitle there, is there life after Brexit? So just a show of hands, if you can just in the little facility where you can put up your hands, you can answer this question for me. How many of you were worried about the developments around Brexit? So you can just put up your hands, some participation. Okay, looks you guys are putting up some hands there. Awesome. Okay, Stuart, awesome. Great. Some of you were concerned. Okay, Martinez, excellent. Awesome. Thanks, guys. Okay, awesome. Cool. Yeah, so the whole thing is Brexit, and we're talking about offshore investing today. So that is the theme. So in this webinar, we're discussing, should you be investing offshore now? Obviously, the main idea there is geographic diversification, but also, is there value offshore? So we're trying to answer those questions today. And like we do with every webinar, my hope for you after this webinar is that, I want to create awareness for you so you can take advantage of market developments. The idea there is that you do something about it, and obviously you can plan better. We've seen the markets already recovering. Someone was asking me a question just now, this whole thing about Brexit, and the idea is that it's a little blimp. If you look at a long-term thing, it is, there are repercussions, but over the long term, it'd be a little blimp. So the idea is with this webinar is to provide options for you to make better informed investment decisions, and ultimately as a long-term investor to have peace of mind. Okay, but saying that, here's a little quote from Karen, and I've call it abused it slightly. The grass is always green on the other side until you get there and see it's AstroTurf. Karen Samuelson, that's a name. She's a best-selling self-help author. So as I say, I've just taken a bit of a quote and just to lighten things up. But you also, some of you might have heard the quote, the grass is always greener because there's more manure or more fertilizer on the other side. So, that just gives us a bit of intro into today's topic. So what is the current situation? We've seen it already, this whole story about Brexit. Some of you that don't know anything about Brexit, it's a term they use with Britain's exit out of the European Union. So it was a referendum last week, Thursday, where everyone of voting age could take part, decide whether the UK should leave or remain within the European Union. I'll be talking about the European Union now. Those of you who don't know what happened is that the leave vote was 52 against the 48% that asked to remain. But what's interesting to note is that the referendum, the turnout was 71.8% of more than 30 million people voting. Okay, so for more than 30 million people voted, it's the highest turnout in a UK-wide vote since the 1992 general election. So there was obviously a lot of interest around this. Those of you who don't know anything about what is the European Union, it's also called the EU. What it is, it's an economic and political partnership involving 28 European countries. And obviously, Britain was part of it. The whole idea was to create a single market, and the idea there was to allow goods and people to move freely around it. Basically, the member states were one country. That's what the whole European Union was. And the vote now was to break out of this now and leave it behind. It's still going to take a while. I anticipate at least another 2 years with all the agreements be closed off and things like that. I saw an article yesterday with Richard Branson cancelling one of his contracts already. But the whole idea now has been left up now to Parliament to obviously to ratify that now, and we'll see what happens. So what happens now? So what was the main fallout? What was the main victim? What was the biggest victim? And the biggest victim was the British pound. This is a graph just going back to 1990, so it's only showing you 26 years, but the actual pound dropped to 31-year low against the US dollar. So you can see they broke through very important support levels. And obviously, we have a scenario now where, as I say, for the EU to leave the UK to leave the EU, they have to invoke an agreement called Article 50 of the Lisbon Treaty. They anticipate that in another 2 years. And the thing is also, the Prime Minister, David Cameron, he's also stepped down now. He'll be stepping down in October. So he's leaving it to his successor to be drawing up that negotiations and things like that. But the bottom line, it's creating a lot of uncertainty. There'll be obviously uncertainty leads to volatility, and obviously that affects the markets. So that's the main thing, the British pound. So what's the implications? If you look at, with the pound dropping, the effect of that is on savings. This just shows you quickly of the major countries. Here's the FTSE. This is the weekly charts of all those countries. The Financial Times 100, the UK market. You see, yes, there was a drop, but not radical. It was really falling already. This is the DAX German market. That's the French CAC 40 for the top 40. That is the UK market. Sorry, Nikkei. The Nikkei was already falling below its 200-day moving average. And this was the Dow Jones. So all the markets come back. Some of the markets have gone below the 200-day moving averages. The UK market has been in a bearish trend already for a long time. So it was maybe a trigger. French market about to go below that. And I see a lot of the markets now are starting to recover. So the main thing is now the Bank of England has to decide, if the economic performance deteriorates, they have to decide if they're going to do further quantitative easing. So it's a way of it's an alternative to cutting interest rates. That's the number one. And obviously, lower interest rates affects the savers. So yeah, I know that a lot of people here in South Africa that live off a pension from the UK. Now, if interest rates go down, they get squeezed. On the other side of the coin, if inflation gets out of control, they have to raise interest rates, and obviously that would be better for the savers. So those are some of the implications. Bring it back home. Excuse me, let me just bring a... Sorry about that. Yeah, so if you look at some of the shares that are UK orientated, go to the next slide, as I said. Okay, there we go. So here's breweries, SA breweries. The main thing there is listed on the London Stock Exchange. You can see it has fallen. I was reading an article about the deal was originally struck at £44. So obviously the pound falls to 31-year low against the dollar. That has an effect on the agreement. The original agreement validated the deal at 108, and it's fallen to, I think it was 95 or something like that. So obviously the pound has implications on there. And I saw Brito. He's still very obviously looking long term, and the deal's still going ahead and things like that. There's Old Mutual. We can see the volatility there. Old Mutual's also going through this big shake-up at the moment. This is British American Tobacco. By the way, breweries obviously hasn't got a big exposure to the UK market, so that doesn't really affect them there. This is British American Tobacco, so not too much there. Anglo. More on the mining side, it's a bit more sideways market. So now, and then Richmond has been falling for a while, so there's no implications there. I think the biggest biggest share to fall victim to this whole Brexit thing was a company called Capco. Capco very much involved with shopping malls and that in the UK, and it was like a 25% drop over 2 days. So I think it was the biggest victim to that. But what did the Brexit do to some of South Africa's richest people? And according to billionaire data from Bloomberg, this is an article I came across, the world's 400 richest people, lost a combined $127.4 billion last Friday. Okay, so that's after the announcement. South Africa's two richest men, retail mogul Crystal Visa and diamond magnate Nico Oppenheimer, lost a combined $634.8 million due to the market fallout. Obviously, the vast majority was lost by Visa. He lost $626.2 million last Friday. Okay. What is interesting to note also is that this whole Friday and Monday, 3.9 trillion was wiped off the markets. That's markets worldwide. Okay, so yes, I say it's a little blimp, but obviously there was a lot of repercussions around that. Okay, so interesting to note that. Um, Yeah, so there's a question that came through just now. Was there overreaction to Brexit? I think the market was shocked, and I think the pound took the hammering there. So the main thing, yes, there was overreaction, and I think to a large extent there was the overreaction, and the market is recovering now. So we'll see. So let's move on to that's the current situation. Uh, Obviously there's winners, there's losers, and in this scenario, the winners were the gold shares. A lot of the gold stocks rallied like crazy. People rushed into safe haven. So you can see Anglo Gold is looking at a weekly data, a weekly chart. So it shows you the long-term graph. So the 50-week moving average is about across the 200-day week moving average. So that looks very bullish. This is Goldfields also about to break through a resistance area. Harmony Gold also moving up very strongly. And then here's New Gold, the ETF. ETF, a lot of people have gone into physical gold. This is the rand price of gold. So when there's uncertainty, people rush into gold bullion as a safe haven. So that for every winner, there's a loser. And here we can see these are the winners. Okay. So the big question today, should I invest offshore? And yes, there's a lot of other stuff we've been looking at. Here in South Africa, the slow economic growth. We look at the current account as a percentage of GDP. We just had our first quarter figures came out, and we're negative 5.2. That's from a negative 5.1 in the fourth quarter of last year. So we are deteriorating on the current account deficit. That's slowly increasing. We see inflation in the first quarter, and that's a bit of some good news there. We're at 6.1. From the last quarter, 6.2, and the third quarter from last year, 6.3. So inflation has been coming back, which is good. The problem if we look at things like the rand weakness, we're one of the most volatile currencies in the world. But saying that, I want to put it right up front. You do not want to go invest offshore because of the rand. If you want to trade the rand, rather go trade currency futures. We did currency futures webinar about 2-3 weeks ago. You want to go in offshore, and you'll see on the next slide to take advantage of shares. Okay, but here in South Africa, what are the other reasons why you want to go offshore? Yes, we've seen service delivery protest, and that's been a lot in the news lately. Not so much on SABC News, but we see it on social media and things like that. So as a service delivery protest. Eskom, when I say Eskom, it's not so much the load shedding now. It's more the power outages, and I think there's a lot to do with crime around that, the people stealing cables. We've seen water disruptions and that kind of stuff. Corruption, political interference in parastatals, that's still ongoing. Obviously, high levels of crime, labor unrest, and obviously high unemployment. We saw that in our quarterly one, unemployment has risen now to 26.7%. From last quarter, 24.5. So that is a big issue. So the reason why you want to go offshore, and this brings up to what I think is the ideal situation. Why do you want to go offshore? Because you want to have exposure to, number one, other countries. Okay, that's number one. And also to shares or sectors or industries not available here in South Africa. We're talking about Warren Buffett's bank, Wells Fargo, the credit card companies, MasterCard and Visa, there's petroleum companies, and there are a lot of opportunities offshore that's not available here in South Africa, and that's what you want to take advantage of. Starbucks just come to South Africa. Some of us go rush out and go enjoy their coffees, the expensive coffees, but you might like the company and your opportunity to go invest in it, but going offshore. Okay, so that is, I think, is the main reason why you want to go offshore, is to take advantage of that. The geographic diversification, number one, but also to take advantage of industries or sectors or shares not available here in South Africa. So how do we get there? So what I'm proposing today is to invest using your offshore allowance. So let's understand, first of all, going offshore, you have access to 35 international stock exchanges. Here in South Africa, the JSE is one exchange, 450 stocks. You have access to 35 international stocks. If you look at the New York Stock Exchange alone, one exchange is over 8,000 stocks to look at. So your market, obviously the world is much bigger to look at. So that's number one. So through our online trading platform, you have access to 35 international exchanges, number one. Number two, you can construct a handpicked portfolio, obviously on shares, number one, and then on the ETPs, the exchange traded funds and the ETNs. Down the line, yes, we'll start offering more the mutual funds and that kind of stuff. But from that, okay, you have to choose, what is the right account for you to go offshore. And there's three options for you as a local investor. So option number one is to go offshore using what's called the single discretionary offshore allowance. That's up to R1 million. So this is a scenario if you do not want to bring your money back to South Africa, you want to keep your money offshore in some foreign hard currency, be it pounds or euros, dollars, you name it. But the idea is that you want to take your money offshore. It does not require a tax clearance. And also what's important to understand, okay, you can take a further 1 million after a calendar year. So it's every year you can take off. So on the 31st of December this year, I take R1 million offshore. On the 1st of January next year, I could take another R1 million offshore without having to get any tax clearance. So a lot of people don't realize that it's on a yearly basis you can do that. That's option number one. Option number two, you can use your offshore allowance and up to 10 million rand. And same scenario again. On a calendar year, the calendar year is from January to December. Thereafter, every year, I can take another 10 million offshore. Now, in this scenario, however, okay, you do need a tax clearance certificate from SARS. In other words, if your tax affairs is an order of receiver, no problem. But this tax clearance certificate is very special in the sense it has to have the SARS logo on it, number one. There's a specified watermark on it, number two. And number three, it's only valid for a period of 12 months from the date of certificate. So, you use it or you lose it, as I would say. So those are the two options we talk about going with your offshore allowance. Now, what are the fees? First of all, you got a brokerage fee of 1%, and that's subject to a minimum charge, which is greater of a fixed amount listed below. So, if you want to take your money offshore, you want to take advantage of the pound now. The pound falling to 31-year lows against the dollar, and also the rand also is much stronger. In this scenario, it's going to 25 pounds. So 25 pounds times 20 rand, it's 500 rand. That's what it's going to cost you roughly about. Okay, 500 rand to do a 50,000 rand transaction. There are some limitations. We recommend a minimum of 5,000 pounds. Or in this scenario, this is 2 days ago when the pound was at 20.19. 5,000 pound or equivalent of around about 100,000, 165 rand. Okay, less than that's not economically viable for you. So you have less flexibility. So that's first of all the first fee that we discuss is the brokerage fee of 1%. And then also you have exchange fee. All the different exchanges have a fee. There's a transaction fee. So again, if you want to go invest in the UK, it's going to cost you £2 per trade. And then there's a minimum transaction fee per trade. In the UK, that doesn't apply, but you must understand with other markets. And all this information, by the way, is available on our platform. There will be a link to it just now. And then there's a safe custody fee, exchange custody fee from JP Morgan. Let me go back. $20 per trade. So those are some of the fees that you have to be aware of. The third option is what we call an asset swap. So number one, if you exhausted your offshore allowance facility, you've taken your 10 million off this year, you want to take some more money offshore, then you can use what they call the PSG Wealth Asset Swap Facility. Now, what is that? It's a unit trust that uses PSG Institutional Reserve Bank approved asset swap facility to take funds offshore. So it's like a unit trust facility. Remember, here in South Africa, asset managers are allowed to invest up to 30% of their retail assets, assets under management, as an asset swap facility. The only proviso here with the asset swap facility, if I sell, the money has to come back to South Africa in rands. Okay, so there's no limitation. I can take as much as I want to offshore using a facility, but provided that money comes back to South Africa. The fees are very similar. Only thing is that there's a platform fee. I'll discuss that now. So what are the advantages of asset swap? I don't have to apply for the foreign allowance clearance. I don't have to get tax clearance from SARS, number one. And I don't need the application doesn't have to be approved by the Reserve Bank. So, but I still have the benefits of investing globally. That's a nice thing about it. Number two is I say there's no limitation how much you can take offshore using asset swap facility. Another little benefit, there's no initial or upfront fees payable with the asset swap. So there's some pros and cons there. They say the ER, a minimum investment of 100,000, number one. Number two, the brokerage is involved is the same as 1%. But there's also, as I say, ongoing administration fees. It's 0.5% per annum, and that's levied on a monthly basis on the market value of the investment. So those are just some of the fees applicable to that. So what are the benefits? What will this investing offshore, what it will do for you? So we've already spoken about it, and I'll highlight again. I think the main reason for going offshore is to take advantage of investment opportunities not available here in South Africa. So if for example, I know in the States, there's a whole industry around biotechnology, nanotechnology, and that kind of stuff. There's exciting things happening around that. So having exposure to that kind of sector as such, number one. Number two, obviously technology. You know, we're talking about Nike, Apple. That's just one cell phone or company, but there are a lot of other technology companies you can get involved with. Well, the oil industry is very big in the States. The automotive industry is very big, that kind of stuff. So investment opportunities not available in South Africa. That's what first thing I want to highlight. Secondly, obviously, geographic diversification. We talk about all the different asset classes, but also you want to diversify it geographically. Something happens here in South Africa, you've got insurance, you've got money offshore. That's what we're talking about here. But also saving money for future expenses. In this scenario, I'm talking about you might want to have a daughter or son that wants to invest, that wants to go study overseas. Now you've got money offshore to do that facility. Okay, that opportunity. So children's education at foreign universities. If you travel extensively or you want to retire overseas, you got money offshore. So that's a nice thing about it. And also it offers a hedge for those people that fear political and social unrest. So, you know, take some money offshore. I suggest you talk to a financial advisor, how much and things like that, the tax implications. But those are the benefits I think are why you want to go offshore. So saying that, it sounds like a great idea, Sean, but what about the other things? So let's talk about the disadvantages. So what are the disadvantages of investing offshore? I believe it requires a high appetite for risk. We've seen it already. You know, it was a shock to the market that they decided to leave the market and the pound dropped to 31-year lows. That has implications. So those things can happen. It's out of your control. So you need to have that high appetite for risk, number one. Number two, I believe that you need more time to watch the markets, and there's a lot more things involved. You know, politics, there's economics, all these things come together. So you do need a expert knowledge, number one, of all the different markets and obviously the trading processes, not only the currency exchange movements and the implications around that too. And then the big thing here, it does require a significant chunk of funds. We're talking about a minimum of £5,000 or 100,000. So investing offshore is not for everyone. If you've got less funds on that, the alternative is to go to the ETPs, the exchange traded funds. I know DBX trackers. Deutsche Bank has a range of ETFs that you can take advantage of to get exposure offshore. Okay, so those are some of the considerations that you might be coming up with. Okay, and also you have to deal with volatile markets. You know, volatile markets, volatile currencies. So those are some of the disadvantages. And global markets can be rather daunting. You know, events that's unknown to the individual investor. So you can be taking risks that you're not aware of. So be aware of those kind of things. So, guys, I hope you've enjoyed it. Let me see what kind of questions you guys have. Brexit. Yeah, there's a big thing now everywhere. Milan, I believe you. It's going from Brexit to Brexit. In other words, they're regretting the decision. Okay. Lucky there's no questions coming through. Fine. Awesome. We've got it. Benjamin, thanks. Yeah, thanks a lot. Hope you enjoyed it. Yeah. Good question here from Frankie Fouchier. How can one perform technical analysis on offshore stocks? And yeah, thanks for bringing it up. Yeah, that's the biggest challenge of offshore markets, Frankie, is the access to information. And one of the websites I use a lot and I recommend is Google Finance. And on Google Finance, you can do some limited technical analysis, but also it also adds in the fundamentals. A great question there, Frankie. I suggest you use Google Finance. Okay. Uh, yeah. I'll be sending the presentation through to you guys. What are the tax implications, Jan? It's the same thing. Every market is obviously different tax implications. But again, that's why I suggest you speak to your tax advisor about that. Okay. Capital gains tax, income tax, all the things, same things that have applied. Okay, let's see what other questions are coming through here. Okay, Francis got a great question here. I recently heard that UK pension funds invest 80% of their assets outside the UK. How much should South Africans invest offshore from their retirement investments? Uh, Francis, again, you know, it's up to you. I know I think it was retirement annuities. I think there's a limitation of 25%. Going into offshore, I can't remember offhand the numbers. So there are certain restrictions, but with normal investments, it's up to you. You want to spread it around, spread the risk around. I suggest again speak to your financial advisor. I know some financial products do have limitations going offshore. I can't remember if it was 15 or 25%. I think it's more than 15%. There were limitations with going offshore. To confirm, yeah, there's a question from Bruce Stewart. To confirm, PHG has a platform and offers online access to trade on various international exchanges. Yes, we do. Obviously, you need to register for an offshore account, and then obviously choose the asset swap facility or the offshore allowance. But we do offer that facilities. That's a one-stop shop. Okay. Kenneth, regarding the possible downgrade of Moody's in December, to a large extent, I think it's been discounted already. So we've been given a bit of a respite. We've got 6 months to get our house in order. It's more the policies and that kind of stuff. So it's still a 50-50 there. We had a presentation from the guys from S&P. And yeah, it all depends on the policies and what happens in the next 6 months. So we have to work hard to do it right. Can I invest in living annuity funds offshore? Yes, there's no limitations on with that. Okay, Francis, I bet off. So James, so 25%. I think it was limitations there. Question here from Milan. I'm not 100% sure what you mean. Do you have to invest in Australian equities to prepare for future funds in case you wanted to use Australia, for example? Yeah. If you want to move to Australia one day or to New Zealand, yeah, it'd be a good idea maybe to get exposure to those stocks. So by the time you move there, that you have access to, you understand the markets already. So hopefully that's what you mean. Okay. So yeah, you have access to the Australian Stock Exchange. Like that's most of the questions going through. Okay, yeah, that looks like all the questions. So guys, I hope you've benefited from this. As I say, I'll be sending the recording as well as the PDF to you guys, hopefully either today or tomorrow. But the latest by Friday. But yeah, just to wrap it up quickly, what I want you to gain from this presentation today is that in conclusion, the main idea is that you want to diversify your assets or your investments geographically. That's the main reason why you want to go offshore, number one. Number two, I believe very, very importantly, to have exposure to stocks or sectors or industries that's not yet available in South Africa, that you have an interest in, and obviously that's why you want to get involved. Then we've got 35 foreign exchanges, so you're splitting it around all different currencies also. Those are the advantages. It's just diversifying that risk. And yeah, so you can invest in different industries, sectors, and shares not available here. And you have the three options, either the million, 10 million, or the asset swap. Okay, so what next? Where do we go from here? I suggest you guys, those who are interested, is go onto our website, click on this link, goes into more of the offshore shares, explains to you the fees and that kind of stuff. If you have more questions, you're please welcome to contact our client services department by email there, and there's their phone numbers too. Okay, but from my side, thanks a lot for being on this webinar. Next week, we'll be talking about the long and short of it. So I've got a colleague of mine, Grant Mankies. He's heading up PHE Securities. He just joined us recently, and he'll be talking about CFD trading. So those of you who are interested in CFDs, we're talking about it next week. The week after that, I'll be back from holiday. The topic is how to protect your offshore allowance. So there I'm specifically talking about IDX futures, international stocks, but using a facility here in South Africa called IDX futures, international derivatives, to trade those stocks. Okay, so that'll be the next 2 weeks. Okay, but from my side, thanks a lot. There's my email address and our toll-free number. You can get a hold of us. I hope you've enjoyed this presentation. Until next week, all the very best. Bye for now.